Kenya's Westgate Mall is the hallmark of a new up-and-coming Nairobi that over the last decade has seen rapid economic growth and attracted billions of dollars in foreign direct investment. Aly Khan Satchu, the Chief Executive of Rich Management, joins us now from Nairobi to look through some of the implications, economic implications of the attacks that have grabbed everyone's attention. Aly Khan, if you go back to 9/11 in the United States, the global economy then was paralyzed. People didn't want to invest because of the uncertainty. Do you think we might be facing something similar, obviously on a Kenyan-focused scale, as a result of this attack?
So you're quite correct. You know, we've had an enormous crowding in of foreign investment. There's been a lot of excitement. Only last week, Alec, I was at a conference co-hosted by the government and the IMF called Kenya Takeoff. So obviously everybody's extremely nervous about how this plays out. As you can see behind me, it's billowing smoke from Westgate. So we haven't reached the end game. I'm not certain that we are that much closer to it. And I think the key risk for investors is whether this is a one-time event or whether this now represents a new and more uncertain normal. And I think from an investor point of view, obviously the latter is the least desirable outcome. And at the moment, it's impossible to know what the outcome might be.
How long might it take before we have clarity on that, whether it is a one-off or it could be extended?
So today, the market was very resilient. The shilling traded lower, but not by very much. The stock market was reasonably solid. And I think, you know, the market has proven its resilience over the last 18 months. We've had to weather a number of hurdles. They say bull markets climb a wall of worry. Remember, we got the ICC situation. But the market has so far proven able to look through all that noise. I think if this is wrapped up in the next couple of days, I suspect the market will be okay. But obviously at a huge risk to being hit with any secondary event of any kind. And I think then really you'll see a lot of chips being taken off the table. For now, I think those chips remain on the table.
I was reading through something that you tweeted today about your column in the Star newspaper, but right next to it was a report which said that this week there will be 2 conferences for the tourism industry. Is it likely that they'll go ahead in the first instance? And secondly, at least some kind of a pall, if they do go ahead, would be cast over them?
So I think tourism is really at the sharpest of the sharp edges regarding this situation we've had and are currently undergoing. It's had a poor first half. Numbers were down about 10% year on year. We're in the peak season right now, and you know it really can't take another blow to the solar plexus. But unfortunately, we live in a 24-hour world. These pictures are flashing all over the world, and you know most people will look and say to themselves, "I can go somewhere else this time round." And it's just that sort of thing happening that will put a lot of pressure on the tourism business. I see the tourism side as taking the biggest hit. Taking the biggest punch of all the punches that are coming out of this situation.
Tourism-related shares on the Nairobi Stock Exchange?
Very few. There's the TPS Sereno, which is a very broad-based a group of hotels, including Tanzania, Uganda, Zanzibar, and Kenya. So thankfully for TPS, you know, the exposure to the Kenyan tourism sector, whilst reasonably large, is not the entire portfolio. So I think at the current price that you see TPS trading at, it's probably not going to dip too much. Kenya Airways, the airline share, which has been under tremendous pressure for quite a while now, beginning to show some basing patterns, I think can probably hold its nose ahead in the current situation as long as we have nothing further developing.
That was Aly Khan Satchu.